Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets continue to remain weak on expiry day. The Nifty has fallen below the 11,000 mark. The Bank Nifty is leading the underperformance today. Sun Pharma is the top gainer on Nifty after reports suggest that SEBI found no merit in the allegations of fraud against the company. Indiabulls Housing Finance is the top loser on the Nifty. The counter will be excluded from the Nifty 50 index from September 27th and replaced by Nestle. The government allows 100% FDI in merchant coal mining and relaxes sourcing norms for foreign players in single brand retail, brings in a 26% cap on FDI investments in digital media. Good afternoon, Neeraj. It's turning out to be a volatile expiry day. I think we're once again back around the levels of 11,000.
Yeah, and the Bank Nifty again leading the charge downwards. Pretty similar to yesterday's session as well. And the banks were the principal culprits, and in today's session too, banks are the principal culprits. The volumes in today's session would be high, so you would have the F&O volumes for sure moving up in trade today. So no surprises there. About 18 lakh crores done already. Cash market volumes 20,000. So you'll probably have volumes pretty similar to yesterday's session on the cash market front at least. Maybe the FIs continue to sell. Get the heat map up on the screen. More red than green, and that shouldn't surprise. Actually, it's almost even, Stevens, but the quantum of falls on the reds are pretty steep. So look at the banks. Actually, it's financials which is dominating. The first 6 losers are all financial names, and in fact, the top 10 losers are all rate sensitives in the session today. 3 auto names, and the remainder are all banking names. IndusInd, Axis, ICICI, HDFC. Indiabulls Housing Finance, of course, the omission from the Nifty impact likely there, and Yes Bank continues to slide lower as well. What is trying to offset this losses but kind of failing are stocks like Sun Pharma, Vedanta, JSW Steel, not the heavyweights in the truest of natures. Aisha too, not a heavyweight. The only heavyweight or a couple of names which are doing maybe reasonably okay and have some weightage are Maruti and ONGC. Both of them, Maruti in particular, are higher up in the session. But even Stevens, as far as the gainers and the losers go, just that the quantum of losses in the banks are so large that they are weighing down on the index and the Bank Nifty. What about the broader end of the spectrum, Devina?
Nothing different, Neeraj, and it tends to mirror what's happening on the larger index as well. So for the mid cap and the small cap index, will come up on your screens in terms of the mood today. It's down. Somber mood, about a third of 1% cut for the Nifty mid cap index. That's got a few gainers. The Sun Pharma advanced research on the back of what Sun Pharma has been doing is up about 9%. Oil India, RBL Bank takes a breather from all the selling that we've seen over the last 2 days when it was wiped off almost 20%. Oberoi Realty also some green shoots yesterday, some respite today on the back of the IT officials leaving their premises. IDFC First Bank, and you've got Endurance Tech, which is doing well. Amongst the losers, Reliance Infra, then you've got Sterlite Technologies again. So dilly-dallying a lot over the last few days. Sterlite Tech is now down about 5%. Future Consumer, Adani Power, Dilip Bilkon are losing out. In terms of the small cap losers and gainers, the index itself is lower in the session as well, down about 0.5% plus. ITI Limited, MMTC, Jet Airways, CG Power. So your usual suspects would see a lot of selling. They've taken some gains in today's session. And then Ujjivan Financial Services up about 3% losers. Suzlon, Indiabulls Real Estate is down 6%. KEC International and some of the TV broadcaster names are there which are looking weak. But what's been happening in the futures and options space today is the important monthly expiry for the month of August. And what is the setup ahead of that? Navneet joins in to highlight that for us. Navneet, good afternoon.
Good afternoon, Devina, and thanks for that. We're headed for the straight third series where Nifty and Bank Nifty will be witnessing some bit of losses. And it looks like the bulls are looking to defend that 11,000 mark because we've recovered now from the day's low. Nifty is at 11,000. The rollovers this time around have been on the lower side if you compare them to the average rollovers of last 3 months, just about at 52% vis-a-vis 60-65, which we've seen in the previous series. Pull up Bank Nifty, which has underperformed so far in the August series, which is down about 4%. The rollovers are still at about 49 to 50%, so they're not picked up, underperforming once again today, trading below the 20-day moving average. Interestingly, if you look at the options data, when we started the expiry date today, the maximum open interest on the put side was at 11,000, almost 42 to 43 lakh shares were there. there's unwinding now. The put writers of that strike have seen unwinding of about nearly 11 lakh shares, and the fight is now between the 10,950 strike, which is active on both call as well as put side. If you combine the premium of both call and put, of course, there'll be time decay. You're getting a combined premium of somewhere about 60 to 65 points, which is telling you the expiry may take place in that range of about 10,920 to about 11,020 on the upside. Let's see where we're headed, but towards the end, in terms of stock futures, Sun Pharma, we've been addressing the stock. It's heading very close to its 200-day moving average as well. And on the cash side, it has gone up on good amount of volumes, because if you compare the volumes of today to the average volumes of last 20 days, they do appear to be on the higher side. India Bulls Housing coming out of Nifty from September 27th. For the series, August series, it's down 30%. And today also we are seeing short positions being built up at current levels. The stock's down about 5%. And lastly, I don't address this stock among the stock futures, but Colgate is the one which is at day's high today, and it has seen some bit of buying interest. It's underperformed its FMCG peers for sure, but for the week it's up 4%. And I was just looking at the cash data. Almost 45% of the quantity so far that has been traded is marked for delivery as per NSE data, and the rollovers are also looking pretty good. It's about 84%, and the stock's trading with gains of about nearly 2%.
Okay. Got that. That is the futures and options set up at this point. But let's begin with the market voice then. Mahantesh Sabarad of SBICAP Securities. He's joining us on the show this afternoon. Mahantesh, thanks very much for taking out the time. We saw the initial euphoria the first few days, and the kind of ammunition that the government has come with and the announcements that they have made. But it looks like the excitement seems to have fizzled off when reality strikes back again in terms of what exactly is the growth potential of companies, earnings performances, the overall global picture not looking all that strong. So how would you position yourself now, keeping all of these moving parts in mind?
Good afternoon. The interesting part about the ammunition that you spoke about that the government has unleashed in the form of removal of FPI tax, or the additional surcharge that we had seen, to some other measures related to MSMEs, to even the FDI norms being eased, is that the problem about FPIs is continuing to remain. Now, when I say problem, it is not problem that is India created kind of problem. FPIs have been problems in terms of investing overall in the emerging markets, partly because of a lot of flip-flop in terms of policy statements by the Fed, uncertainty around the Brexit event, and generally slowing economy across the globe. So India is no different in terms of the slowdown effect. India is no different related to the other emerging markets in terms of performance. There could be, depending on the period that you choose, a slight bit of underperformance to overperformance, but I would reckon that FPIs have a problem about investing in India, and those problems reside outside India, not necessarily in India. So despite the measures, FPI outlook continues to remain there, and that tells you that the larger picture is that FPIs are taking the risk off the table.
You think this is going to last for at least the next 2 or 3 quarters, in light of which then probably investment decisions could be kept on hold for some time, or you don't believe that, and probably levels of 11,000 are also attractive enough to start making those staggered investments?
So let me address the attractiveness of the 11,000 mark. The Nifty earnings, as we know, is not growing as has been forecast, or most of the analysts are downgrading the Nifty earnings because there is a distinct slowdown that has come about, and this slowdown was, I would reckon, unanticipated, simply because there were a lot of hopes getting built pre-election that the new government that will come will see a slew of reforms coming in, and therefore will give general boost to the investment climate. That apparently has not happened thus far. Not only that, global economy has further weakened and deteriorated because the trade war tensions that used to exist even in the last calendar year has continued to sort of remain as an overhang over the market. And then you have the upcoming Brexit and so on so forth events. So Nifty earnings not growing, the risk element missing would mean that the market is not very attractive, I would say, even at the current valuations. Therefore, probably a quarter is what I would reckon it will take for FPIs to sort of conclusively come back to the market, to the Indian market.
So would you recommend Indian investors and retail investors to probably wait it out for one more quarter?
Sorry, about the retail investors, what was the question? Sorry.
So in light of that, if you don't expect foreign money to come back in a rush and probably take one more quarter for it to come back, then would it be prudent for even retail investors to probably wait it out? Maybe they'll get better levels than 11,000.
So for the retail, the equation works a little differently. Now retail participation is both direct in the form of they themselves purchasing the equities, and there's an indirect retail participation which is typically via the mutual funds. What we have seen is that the retail participation is quite robust because they are able to absorb the FPI sell figures to a large extent. I'm also adding the mutual fund figure here in terms of the DII purchases that we are seeing. So for really the long-term retail investors, it's probably the best time to invest, I would say. And there's this big change that we are seeing is that most of the retail investors are now content at building a portfolio than really doing that trading kind of activity, getting in and getting out, probably intraday or sometimes positional for a few months and thereabouts. Now they are focusing their attention toward building a solid portfolio of their own before they venture out into the trading aspects. Again, the same phenomena. The risk is going off the table. They are becoming more sort of focused towards building a long-term portfolio.
Okay, just want to mark a few indices, I think, which have recovered. Pull up the Nifty Pharma index that's sitting with gains about nearly 2% right now. We've seen gains coming in. Of course, Sun Pharma has been up and about right from the word go, owing to the news that it's received, according to Business Standard, that it has received a clean chit from the regulator, SEBI. But you've also got stocks like Biocon, Divi's Laboratories, Dr. Reddy's, which have recovered from at least the lower levels of the day. Biocon sitting with gains of about 3%. So Pharma is one space which has seen some recovery, and the other space is metals. I think the Nifty Metals Index, which is a beaten down index, by the way, on year-to-date basis, that's also sitting with gains of about nearly 2%, almost a day's high. You've got counters like JSW Steel up about 4%, Vedanta, Coal India, Steel Authority. Most of these stocks are seeing recovery from the lower levels of the day. Vedanta at 3.5% right now. Mahantesh, good afternoon. Let me talk about metals, which is already beaten down, and the reason for that is also global backdrop because of trade war fears. And yesterday we also had Moody's downgrading the Asian steel producers. So already so much of correction has taken place, and the market participants will wait for the cycle to turn. But do you see any sort of valuation comfort, anything looking attractive to you?
So within the metal space, the sector is a general avoid for us, simply because the down cycle that has begun has not begun, I would say, in the last 1-2 months. It's been sort of there in place for probably several months, more than 8-10 months already. You would see that most of the metal stocks therefore are down, particularly led by the steel stocks. There are other factors also at play in that space, and that's got to do with the domestic demand itself. We are seeing that domestic demand is gradually sort of slowing down for the steel sector, and the debt worries are just not going away. Despite policy interest rates coming down, the transmission of the rates is not happening, and that advantage is not coming to most of the steel players, to metal players, because they are dependent to a large extent even on working capitals from the banks and so on and so forth. So it's a collective phenomenon, and yes, globally commodity prices are under stress. They have been volatile, I would say, but they are generally on the lower side, simply because of the trade tension. Simply the global economy is itself slowing down. China's appetite for consumption of commodities has distinctly come down, and whichever sector you look at, whichever is it on the commodity side, China is sitting on huge inventories, and there's always that fear that once China unleashes those inventories, you would see prices generally collapse. And that fear remains. So metal is therefore not an attractive sector for investors right now.
And what about the pharma space, which for the longest time has been witnessing pricing pressures in US? Do you see any value there? And specifically for Sun Pharma too, which has gone up today, that's of course owing to news of getting a clean chit from the regulator, SEBI.
So I think the good development about the pharma companies is that rupee is depreciating. So a depreciating rupee environment provides a little bit of buffer to most of the pharma companies who have earnings either in the US or export earnings out of India in Europe and other geographies. So there's a small bit of cushion that is available. We've also seen that over the past several months, somehow the FDA pressures are very limited. So we don't see many of the pharma companies facing FDA-linked inspections and adverse inspection reports. So that's the good part about the pharma company. So you would notice that most of the pharma companies are therefore fairly steady, have not collapsed in terms of their price terms. And then there's this fresh development on contract manufacturing also. I assume that is also applicable to the pharma side, and that could perhaps drive up valuations for many of the pharma companies. So pharma is probably poised to become attractive, but then we would not advise our investors to sort of dabble in pharma stocks at this juncture, irrespective of whatever news you're seeing. Sun Pharma has been an avoid for us for several sort of months and sort of continues to remain there, irrespective of this SEBI kind of relief that they have got. The business is suffering quite a bit, and they are not able to sort of ward off that pricing pressure, the generic pricing pressure seen in the US.
Mahantesh, any thoughts on this recent FDI moves and the coal mining allowance that has been given for Coal India or some of the other private miners?
It's a very difficult question to answer, because you may have invited FDIs in the coal sector on a commercial basis, but coal mines are, I would say, tightly controlled. The access to coal mines are tightly controlled by respective state governments. So there are various challenges. You have to get the licenses from the state government. You need to have proper evacuation facilities or infrastructure, which is largely rail dependent, and we don't know where those are sort of available. And effectively the commercial mining also has this land issues, that is procurement of land becomes a problem in most of the states. So I guess that FDI right now for commercial mining does look attractive, but I would reserve my comments because we have to see these developments as well. These bottlenecks have to be removed by the government. I guess they would have thought through that, and once those bottlenecks are removed, probably it will give a boost. Until then, we would just wait at the sidelines.
That's actually quite an interesting point, because when one of the biggest players, Coal India, is struggling to meet production targets, it raises serious question marks on how game-changing this is going to be from a foreign coming in into this industry, and how possible it is with regards to all these other hurdles that they'll have to cross to make sure that it becomes a good enough or a competitive space or an environment to be in. But we shall get in a voice to talk about this in just a few moments. In fact, an industry veteran, Agarwala, will be joining us shortly. But Coal India, for that matter, most brokerages that we've spoken to have said that this is not going to have any short-term implications for Coal India, at least for now. The stock is still holding out to about 1.7% in terms of gains. They're not to take away from the fact that it is still trading under its issue price. But that's what you got. Coal India, they're about 188.
Yeah, take a moment to thank you, Mahantesh, for joining in today and giving us your thoughts. Really appreciate your time and your views on various spaces as well. I think that's the question that we'll probably start off with Agarwala with, right? I mean, it might be great news optically that yes, it is allowed, but if it was anyways allowed for the domestic players, and we haven't seen any of the domestic players make a beeline for making those investments, not necessarily due to their fault alone, but due to the fact that there are regulatory issues at play. I mean, it's not easy to
there was no
do
stopping
this
these metal companies from, getting the backward integration done, getting their own coal supply.
or oil and gas for that matter,
Yeah.
right? I mean, with this
Cement
allowances are there.
Mahantesh made a very pertinent point. I think there were some auctions for these coal mines 3 years back. They're still not up and running, and these were for captive mining. It's not still started because of regulatory hurdles. Evacuation process is not in place. The government is not guaranteeing you any sort of railway racks, particular railway racks. So evacuation remains a very, very big concern. And of course, Coal India's production so far in this fiscal is down 1%. So that speaks volumes in terms of regulatory hurdles and mining hurdles which the company is facing.
Yeah. So, well, maybe measures in place to try and do this. And let's talk about all of that and more with Mr. Anil Agarwal. Needs no introduction. Mr. Agarwal, thanks so much for taking the time out and joining us. Now, what do you make of these announcements? Optically, they look great. FDI allowed. People should ideally come in. But we know that in India, even Indian companies were allowed to do all of this. But that move hasn't really seen a ramp up of investments in coal mining thus far.
Let's remain positive and optimistic because fundamental lot of import of coal is happening and which has to stop. Three things is happening. We are losing the job, draining out our foreign exchange, an entire country, logistic, everywhere, port to everywhere, black. So this will definitely is a very strong move, and I'm looking forward the large mining, as Coal India is only one company, very unusual in the entire country of 1.3 billion people, which supply the coal. So we definitely needed more company to come in, and which is a very good move. And I'm looking forward large mining of 100, 200 million ton to be open up, which will require billions of dollars to create the infrastructure, open up the mine, lakhs of job will be created. And it will have a very good impact on the industry because industry will be competitive. Power cost will come down. Availability of coal will be there. At the same time, today's mining being opened up with a lot of new technology.
Of course.
To environment, global warming. So this will be very, very, according to me, very good move. And this should not be strict to coal. It should be to the
go to
copper,
other sectors as well.
to
Sure.
the bauxite, any kind of mining.
Maybe even gold mining. Mr. Agarwal, the only question is, since Feb 18, this was available for domestic players to ramp up. Why is it that there has been very little interest in such a scenario then? If this was such a hot cake.
No, earlier it was not a commercial mining. It was very captive and very, very small mine. 1 million, 2 million, 5 million. This will open up 100% FDI, and this is, of course, for the domestic player and the international player. The people who do large scale of coal mines will be very lucrative for them. And government is also coming out with the policy. The biggest problem is the forest clearance, environmental clearance. And government is coming out with the policy to clear everything within 90 days or 120 days. This will be, again, a huge game changer. This will be the breaking point. And this, you will see this coal opening up, it was looks simple, but it's a big thing government has done. A very big thing they have done, and I'm looking forward a lot of interest to develop all over the world.
Mr. Agarwal, while you spoke about forests and the acquisition of land, which continues to remain a hurdle. For one, Coal India and its affiliates account for about 80% of the total coal output. They're struggling to meet production targets right now. Do you think that even if this is of such great interest and you do see a lot of money coming into this field, because of all these regulatory hurdles, it could actually land up being a fairly long drawn process, which could then may not make it look as attractive for a foreign investor to come in?
There are two things. One is we have experience in all our Hindustan Zinc, Balco, Sesa Goa, where when we step in, today exploration approach is different to keep the environmental very high impact very, very different. So once you have that, we have seen public sector will also do well because they see other companies are coming. And this will be time, lot of time is process. And that's what government is trying to do to come to reduce the process. I have always requested the bureaucrat on the political level, the minds are very clear. When it comes to the detail, they put some kind of twist which delay the process. And again and again, people have to go to the government. Government is very clear to ease of doing business. And to keep it simple, this is, let's remain optimistic. Two things we are looking, the large mine to open up, 100, 200 million ton.
Okay.
And for that, government will come out with the block which are available.
Okay.
And I hope Indian company outsider will come
Yeah.
and participate.
All right.
And this will in turn, because this will in turn cost of production, the cost of production, a lot of depend on the
Sure.
power cost.
Sure.
And once you have a commercial mining, efficient mining, the power cost should come down to the international level.
Okay, so one thing obviously being all of these hurdles that you spoke about and the processes that the government is trying to ease. The other thing is an on-ground reality, which is shortage of rigs. Now, unless and until that issue gets solved, in terms of having meaningful, production and transport, freight costs have been on the higher end. How does one balance all of this out and make it look attractive enough? And the other point that I wanted to also ask you with regards to whether or not you see the coal output increasing substantially, if at all there are meaningful FDI investments coming in and new foreign technology is brought into the fray. How does that affect the output?
No, but as far as the rail is concerned, once you large mining open up, they will do the feasibility. They may create their own railroad because everybody will cater to their domestic areas. If the mines are in Jharkhand or Orissa or in south for lignite, so it all will be catered to the local. We have hundreds of power plants in different sectors. And they will do the feasibility, and they will create their own infrastructure, and that will be there. The other question you have asked about the pricing, right? No, what was the question?
Asking you about whether or not you see an increase in coal output with bringing in of new technology, if and when this FDI comes in, when foreign players come in.
Yeah, today's mining approach is very different, and the Coal India people are also looking at, and India and subcontinent is 25% population of the world, and we have not done even 10% what required and compared to the world. So we need a lot of power, and with both power will work. My feeling is 50% will be coal generation power, 50 will be renewable power as a long term. So let's start this. The whole thing was it been hold up for a long time. Only small mine, 1 million, 2 million was opening up. That was also very high price. No mining was opening up. Government was revenue minded. This is the first time government is a production mine. And this is a real thing has happened where the whole world is looking. Please do not stop production. Don't come on the way of production. More and more production will happen. Our Prime Minister vision of $5 trillion will happen sooner than later. And the whole scenario will change. And coal is very, very important. And apart from that, if you see the manufacturing hub is going to be India because China, a lot of problems are there. And what they have said, the contract manufacturing will, I know you have a vision and you can understand how this will be very fast. People can come and start doing the manufacturing in India.
Right.
You will see the iPhone being manufactured in India. A lot of furniture manufactured. I'm looking forward. I'm very optimistic. My fundamental is to create job.
Sure, Mr. Agarwal, it's definitely a step in the right direction, easing off, these FDI norms for several, sectors. But tell us, you have an expertise in mining a lot of these commodities. So will you add coal to your portfolio? If yes, will it be with or without FDI?
No, we have brought a lot of FDI. We have bought almost $30 billion FDI in Vedanta. We are the people who has been put up the aluminium plant, oil plant, iron ore, everything we brought in the FDI. So FDI, there's so much of money available outside. You just saw huge fund being announced, and that has been... So money should not be a problem. What the people were looking, they have burnt their finger in the past to keep very simple policy, forest clearance on time. All the clearances should be one window clearances and very positive outlook. So, and any business has developed in the world only with the help of government. Once government support fully and keep eye open and remaining all the time where the industry need their help, that's what happened all over the world, and same thing will happen in India. I believe this is the time the goal of $5 trillion will be achieved.
Mr. Agarwal, just one question. Would you be interested in commercial coal mining then?
Definitely. We are already in the coal mine. We are already running in Chhattisgarh one coal mine. And mining is, we understand mining. And as and when come, we will definitely look at to participate in the tender.
Even on the commercial side?
Absolutely.
Okay. All right, Mr. Agarwal, it was a pleasure speaking to you, and thank you for giving your views on government's move of allowing 100% FDI in commercial coal mining. Remember how we've been discussing that Coal India itself is facing, who has 80% monopoly. It meets almost 80% coal demand in the country, but they too have been facing issues. The production for them so far in this financial year is down almost 1%. And just focusing slightly back to the markets, we're at 10,984. It's the expiry day. We are looking at some bit of volatility also, so it's 10,984. And the Bank Nifty is at 27,400. That's down as much as 400 points in trade.
All right, the other aspect of this is what they've announced with regards to the sugar space. The Union Cabinet has approved sugar export subsidy for about 6 million tons of sugar. The subsidy will directly be transferred to the farmers' account on behalf of the sugar mills. The move will not only help clear farmers' dues, but also ease the glut after record outputs and raise prices too. Let's discuss these implications of this move with Abinash Verma of ISMA and Atul Chaturvedi of Renuka Sugars. Gentlemen, both of you, thank you very much for joining in. An additional export subsidy will cost the exchequer closer to about 6,200 odd crores. Is this enough for the industry? Abinash, I'll start off with you first.
I think so. I think it is enough for the industry. Even though the losses on exports would be about 11 rupees or 12 rupees per kilo today, if somebody exports into the international market, because the global prices as of now is low on the lower side, mainly because Brazilian production is still on, and the Brazilian currency has depreciated quite substantially in the last couple of weeks. So that's the reason the global prices are lower. We expect the global prices to firm up, say from middle of November onwards, when India would be exporting sugar. And therefore, we believe that the current announcement of 6,200 crore per ton, the subsidy working out to 10,500 rupees is good enough, will be attractive, and the Indian sugar mills will export.
Right. Mr. Chaturvedi, do you concur? I mean, being an industry veteran, also with regards to the direct transfer of this additional subsidy to farmers and the fact that this could actually help in bringing down cane arrears, and do you think it's going to be a meaningful reduction of that?
No, definitely. In fact, one of the best things about this government is that they've been able to take these decisions very, very timely. In fact, the decision being taken in August means that the mills would be all ready when the crushing season starts, and that would help the liquidity of the mills during this season time. And that should keep the farmers' dues much more in check. And this government, I must congratulate them that they've been taking very proactive action to ensure that all stakeholders within the sugar sector are taken care of, the mills are taken care of, the farmers are taken care of, and the consumer also is getting sugar relatively cheaply at around 31 rupees a kilo or thereabouts. So it's a win-win situation for everyone in the sector.
Currently, as we stand at this point, what is the disparity between the realizations domestically and international realizations? And even after this subsidy that the government is giving, does the attractiveness improve that much for sugar millers such as yourself to give a bigger push to export?
No, as Mr. Verma rightly pointed out, that at around roughly 11 rupees a kilo subsidy, that should, at this point of time, take care of the disparity between exporting sugar and the domestic prices. And going into the season, this disparity might actually shrink because the local sugar availability would improve dramatically with the crushing season on. So I think what Mr. Verma is saying is absolutely spot on. It's a good decision, and as it has been announced a little before the season, so I think people will be ready to ensure that the exports actually kick off once the sugar season starts.
Abinash, these moves have been being tried for a while. I don't think we've seen too much of export. You think this alone will do it, or is there something else that is needed along with this?
No, let me correct you there. Last year we were given a target of 50 lakh tons to export. I believe we have done about 38 lakh tons already. And the issue is that individual quotas to each and every sugar mill is given to export. Now what happens in individual targets given, some people don't really export because of various reasons. Last season what happened, there were conditions attached to the exports, that if you fulfill XYZ conditions given by the government, then only you are going to be eligible for the export subsidy. And therefore, there were some people who did not export or who were not interested in exporting. Next year, about 60 lakh tons has been given as the target, slightly more than last year. But I believe that the subsidies now announced will be direct export subsidies, and there will not be any condition attached to that. And therefore, we should be seeing most of us, almost all of us, on board to export. I mean, 60 million lakh tons, even if 50 lakh tons is achieved, I think it's an excellent achievement.
Coming to you, Abinash, when we are talking about, pushing exports, taking a look at how our production has gone up, I think October to April it was about 32 million tons. Brazil's output this year, we are most likely to even surpass that. So, even with a subsidy, does pricing work in favor? Considering we have so much of production and there is still a glut in the system, or do you believe that that's on its way down?
If I get your question correctly, you are asking me that there is too much of sugar in the country and there is a glut, and therefore whether we are going to export the sugar or not.
Yeah, and any which ways in the external market,
that is the reason that we are going to export.
Yeah, and anyways in the external market, globally as well, you have major producers which are also producing a similar amount or maybe more.
International market will be seeing a deficit for the first time after, I think, 3 years. Last 3 years we had surplus production globally. Next year, everybody is expecting a deficit of about 4 million tons in the global market. And that is why India has a very bright chance. If India doesn't fill up that deficit of 4 million tons, the world prices are going to spiral and jump very high. The world market is expecting and wanting Indian sugar. And therefore, we should be getting an opportunity to move our sugar from the middle of November to at least May 2020, when the Brazilians are not in the world market. I see a great opportunity because there is a deficit in the global market and we have surplus in the domestic market. Therefore, export program is going to be successful. Whether we're going to do 5 million tons of exports or more, time will tell us.
Okay, which would also mean the prices globally could go higher because of the deficit. My question is to you, Mr. Chaturvedi. Now that there is a release mechanism by the government which tells every company how much how much sugar every mill can sell now. What will be the opening inventory for you all in the new sugar season, and how much will you look to export? And just for the benefit of our viewers as well, in terms of pricing, international prices are somewhere about 21, domestic prices are somewhere about 31, 32, and there is MSP of about 2 rupees. So does that also mean that the export would happen now at par for the mill owners as well?
No, first and foremost, let me add to what Abinash said. This year, India's production is also going to come off a bit because first parts of Maharashtra and Karnataka suffered from drought, and then subsequently we had floods, which ravaged parts of the sugar-growing area. So you could see sugar production in some of these states plummeting from last year's high levels. So that should be a cause of relief to the excess production which we've been seeing in India. Secondly, to answer your question, specifically, I think LOQs should start moving even now. But I would possibly say that the exports real time will start picking up once the new crushing season is on, which is in November. So then by that time, all these policies would have been in place and the release mechanism would be in place. And to answer your other point of release mechanism on a monthly basis, I think that's another wonderful idea of the government. Otherwise, with such high stocks, we would have seen bloodbath in the marketplace. And the markets have stayed more or less around 31 or 32 rupees a level instead of falling down to 21 or 22 in the domestic market, largely because of the release mechanism. Obviously, this puts a little bit of a strain in terms of the working capital and the interest outgo, but overall it is helping the industry tide over bad times.
All right. Which is the really last question from me, since you already mentioned about the drought period and the floods, and you're saying that the production will come off. What would your back of hand calculation be with regards to if you had to make an educated guess as to what production levels could go down by?
I think Abinash would be in a better position to tell that, but our rough estimate is that you could have a production drop of about 4 or 4.5 million tons or thereabouts compared to what it was last year.
All right, Abinash, is that fair enough?
Yeah, I mean, if you really talk about the numbers, last year we produced, the current season we are going to produce almost 33 million tons. Next year's estimation of ISMA is already at 28.2, so already minus 5 million tons. What is the impact of the flood in the southern part of Maharashtra or the northern part of Karnataka? We're getting our satellite images done and then we'll do an analysis. I think in the next 10 days, ISMA will be ready about the impact of the floods on the sugarcane crop. But currently we are at about 28 million tons as compared to 33 of last year.
All right, gentlemen, we'll leave it at that. Really appreciate you taking out the time this afternoon and joining us on this very insightful discussion. Thank you very much for taking out the time. All right, that was getting in a perspective from the sugar industry, a definite positive. Let's get in our market experts then to talk a little bit more about whether or not any implications lie there for the stocks. Gurmeet Chadha of Complete Circle Consultants is also joining us on the show. Rahul Randeria, independent market expert, is here with us. Along with him, Aditya Agarwala of Securities joining us on the show. Gentlemen, thanks very much for taking out the time. I'm going to quickly run through your calls on the index, and then we go down to specific stocks. So starting off with you, Rahul.
Yeah, looking at the last 5 days of the trend in the Nifty as well as Bank Nifty, we have seen wild swings. In Nifty, we have seen almost 500-point rally and again 200-point correction. In Bank Nifty, we have seen 1700-point rally and again 1000-point correction. So definitely it is highly volatile, and if you look at last 8 to 10 trading sessions on the hourly charts, clearly both the indices are forming an inverse head and shoulder pattern. So definitely the setup is positive, maybe because of the sharp
sharp rally in the couple of days prior to yesterday. This is just profit booking or because of the weekly expiry. So definitely at these levels we would recommend to buy in Nifty in the range of 10,986, maybe on corrections to 10,950. For next week expiry, we are having a target of 11,200, and one should place a stop loss below 10,850. Today, we are not expecting a flare up in the left maybe 30-40 minutes, but definitely at current levels one should accumulate for short to medium term. Same in Bank Nifty, one can accumulate at current levels, which is 27,381, maybe an correction on corrections to 27,200. On the upside, we are expecting 28,000 in next expiry, next weekly expiry, and one should place a stop loss below 26,900.
Aditya, your call.
So I would also concur with him. I believe markets are headed higher. Just to give you a check on the index, every time index declines 10%, market forms a bottom, or rather index forms a bottom when RSI forms a positive divergence. We have seen this in the past. There is evidence in the historical past which proves that every time market forms a positive divergence with respect to RSI, Nifty rallies at least 4 to 5% forming a bottom. So considering the fact that 23rd candle was a bottom, 10,637. 23rd August, that was the low. I believe that should not be broken. Any correction on the downside to levels of 10,930 to about 10,900 should be used as an accumulation zone. There's a hurdle around 11,150, which is the neckline of the inverted head and shoulders, which he pointed out. Once we break out of that, I believe we could be headed much higher to levels of 11,200, 300 in the coming trading weeks.
Okay, very quickly before we go to Gurmeet, Chadha, stock ideas. Rahul, to you first. 2 ideas right now.
Okay, I have two buy calls. First is in Sun Pharma. One can buy at current levels, maybe on corrections to 425 with an upside target of 460, and stop loss should be placed near 418. Second buy call is in Ujjivan Finance. One can accumulate at current levels, maybe on corrections to 288, upside positional target 317 with a stop loss of 283. Both the calls are short to medium term.
Okay. I have got 2 buy calls as well. So one is in the metal space. Hindustan Zinc, it has corrected significantly. It's fallen off the cliff. Standing at support levels around 215, 213 zone. I believe stock can make an up move. A short coming rally can be witnessed in the stock. Targets could be around 228 to 230 on the upside. Stop loss should be maintained at 204. The second buy call is a Godrej Consumer Products. The space has witnessed a significant correction. Now the stock has seen some sort of a consolidation at lower levels. One can accumulate around 600, 602 for upside targets of 630, putting a stop loss at somewhere around 585.
Okay. Gurmeet, Chadha of Complete Circle with us. Gurmeet, thanks so much for being patient with us today. Couple of conversations that needed to be wrapped up. A bit of a correction after 2 days of gains. Is it back to basics, and therefore would you believe that maybe in spaces like autos or real estate where reforms were anticipated, the rally is done?
Not exactly, Neeraj. In fact, I'm of the view the more the market consolidates at current levels, because it is good actually for it to make a sustainable rise going forward. Sentiment continues to be very, very weak, and that's why, despite 3 announcements in 5 days from government, RBI, and the Commerce Ministry, I think and those are more. Barring the FPI rollback, they are more long term and more calibrated. So my view is that a key trigger for me, Neeraj, would be I expect synchronized QEs and asset purchases being announced by most global central banks. I think that will make the liquidity environment better. We've been talking of M3 supply to nominal GDP being lagging nominal GDP growth. It's still not even been reverted to the pre-demonetization level. And whenever we've had a purple patch of growth like 2004 to 7, nominal the M3 supply, which is a broad money supply, has exceeded the nominal growth rates. And I expect RBI to be more expansionary. You will possibly see more OMOs and more other forms of liquidity insertion, because the second half of the year, mind you, the currency in circulation goes up. So while we keep seeing banking liquidity at 1.6, 1.7, the core liquidity minus the government balances is about 60, 70,000 crores. and with this surplus, obviously, it will increase a little bit. So my sense is you will see more liquidity infusion domestically and globally. I've been saying this for a while. Till the time we do something about stressed assets, substandard assets in the balance sheet with a good AQR, the sentiment looks very difficult to reverse. I think what is needed right now is more. It's right now it's become a lack of a trust issue. You saw Piramal delaying the NCD issuance. We still see there be some spread compression, but still seeing NBFCs borrow at high rates. So that sentiment needs to change. And I don't know what it will change. Maybe a DTC implementation, maybe something on some stimulus, some kind of. We need to right now change the sentiment for market to make a sustainable high.
Gurmeet, good afternoon. 3 announcements in last 5 days. We are still stuck at 11,000. We've not seen any major recovery, though of course indexes come from those levels of 10,600. But tell me, the recent announcement on easing FDI norms for a lot of these sectors, is there anything that stood out for you in the listed space, any company which would gain or not gain because of it?
I think very positive on the retail sector. I think this contract manufacturing FDI 100% is a very welcome step, and and also the sourcing easing in terms of local sourcing. If you see the fine print, if you were to give a contract which could be principal to principal or in some other way, so there's some clarification expected there whether it qualifies as 100% FDI manufacturing or it will still come under retail. This could lead to a structural shift. And my view is that this is rightly timed, looking at the way the global supply chains are getting disrupted. Allowing domestic sourcing for all purpose, including sales overseas India, is a welcome step, because we probably need to maybe position India more as a hub where global supply chains can be linked. So as I said, these are all long-term positive. Even FDI and coal mining, I think you will probably see something coming in aviation and insurance also soon. So positive on the retail sector. Good for my sense is aviation is just round the corner. So that's something which is positive. Also, we need a bit of a sentiment booster, as I said. If you see some announcement from an IKEA or an Apple or some of the 100+ single bank retail names coming here, I think that would boost the overall sentiment. So what I will track right now is how this sentiment changes, because long term I think they're taking a series of positive steps already.
Okay, that's the view at least coming in from the measures announced on the FDI front. But shifting focus back to a couple of these stocks which are moving around in today's trade. Pull up Arvind, that's moved up 4%. Remember, these are your beaten down counters. Today's expiry, so it could also be a function of a short covering bounce that you're witnessing for all of these stocks. Escorts is up about 3 to 4% in trade, and you've also got Pyramid Enterprises, which is up about 4%. Aditya, a quick thought on stocks like Eicher Motors, which is up 2% in today's trade. Would you take any bet here?
I would probably. There's a short covering rally which is seen across the two-wheeler space and other auto names. So I believe short covering can be seen in Eicher Motors as well. I would stick my neck out and take a long against the street expectations and look for targets of 17,400 on the upside. My stop loss would be somewhere around 16,200 to about 16,100.
Okay, my producer tells me this is the 4th straight day of gains coming in for Eicher, considering markets were down yesterday as well. Well, your top loser on Nifty is Yes Bank. And Gurmeet, I'm going to come to you, and we've discussed this. You've clearly stated your view. You would right now stay away, despite of the correction that the valuations have seen with the stock price correcting. Just want to get your view here, considering tomorrow is the board meet for fundraising. We're talking about just a month away, where they raised about 1930 crore at 83 rupees. The stock's down to about 55, 56. At that level, 10% equity was diluted. The street's talking about raising additional $1.2 billion. Do you think the bank can go ahead? Of course, they need more of capital right now. Can they look to dilute 30 to 35%? Because that's what the reports have been suggesting, if it's an amount as big as $1 to $1.2 billion.
So you're right. I think the amount is important, and we'll have to see the dilution there. Again, as I said, we probably need a more credible name there. I think there is crisis of confidence, in Yes Bank. We saw that with RBL as well. With the markets are brutal when it comes to any governance, any related party transaction. We've seen that now with so many of them, and this is, I think, to me, this is a kind of a manthan happening in sectors. And I think one good takeaway here is, Nameer, is that what will emerge victorious, after some time once again, is the corporate governance standards. I think there is a clear message, loud and clear by markets, that any let up there, and especially when there is a bit of a slowdown, won't go unpunished. My view is still to avoid, it's a very high risk, high return kind of a trade-off. Even RBL has to be, if you want to be tactical, if you possibly think that something you want to play where you can make a high risk, high return trade, SBI to me is a better bet. There's a good price correction of 20-25%, trades at one book value. We know what are the, we at least know that over next 2-3 quarters, there will be resolutions, some of them high ticket ones. We know that a treasury income, would be supportive. We have seen the NPA, while there is a new cycle of NPAs, and we'll see how this quarter pans out, but we know that the NIMs broadly would be stable. It has a big CASA book. There is a lot of focus on the retail side as far as loans are concerned. So to me, that's a better tactical play in terms of getting into this place. And also some of the banks like Federal Bank and others, where the correction has come, but the overall franchise is still okay. So that's a better way to play rather than get into something where we don't know, who's going to come in and at what level dilution will happen. Too many ifs, and as I've said, no point being very experimental. Taking margin of safety is very, very important when you're buying in these kind of scenarios.
Okay. Some stocks which are doing well. Minda Corp. We spoke to Minda Industries today, but Minda Corp is the one that has really sparked today, and is doing well over the last 6 or 7 days, up about 20%. So watch out for that one. Speaking of Spark, Sun Pharma Advanced Research is up about 9%, doing well for itself in the session today. And then while Piramal is at 1991, sharp up move there. The one that's catching my eye is Polycab. Polycab has a very good move, arguably on the point of Citi coming out with a note. They've initiated coverage with the target price well in excess of 700, 736 to be precise. And various reasons, of course, they believe that it will capitalize on the opportunities. Standard reasons really, cables, wires, etc. They believe that the balance sheet is strong. Cash flows are fairly decent as well. Working capital flows improving, and their targets about their earnings are slightly higher than what the average on the street might be. A CAGR of 26% anticipated FY19 to FY21. Both a technical and a fundamental view. Though a technical one will be difficult because it's an IPO recently launched, so maybe a fundamental view will be more apt out here. Gurmeet, do you track Polycab, and is it a good buy? And if not, is there something else within this space that you like more?
So looks a decent buy, Neeraj. I've been doing a lot of dealer checks, especially when it comes to fast-moving electrical goods. It's a good play there. I although relatively like Havells more, because I think it's a far more comprehensive play. And so if you see all 4 segments, which is wires, your switches, which is commercial lighting and domestic lighting and appliances, Havells has managed to come into top 3, top 4. The receivables in terms of the books continues to be comfortable in line of stress. We have seen very good summer season they have had. Also, the kind of spends they are doing, the A&P spends to get the Lloyd integration done is commendable. They are doing also a lot of, so they have a great access to both the professional customers, which are the key influencers, and the final consumer. So my sense is that's a much broader play. The price has corrected from 800 plus levels to 650 odd. Still, the valuations are not cheap, but I clearly see them really scaling up their appliances business. The volumes, even in switch and wiring, division, continues to be good. A massive distribution expansion happening even in these times. So prefer Havells over Polycab, but even Polycab looks good, in this space.
We were talking about Spark, I think. Aditya, a quick take on Spark.
So there's a short-term rally definitely which is helping the stock. Volumes are healthy in trade today. Good thing is it's trading above its short-term moving averages as well. So I would wait for tomorrow's trading session to open up. Probably if stock sustains above 155, I might take a long trade in Spark for targets of 170, put a stop somewhere below 150, a stop somewhere around 147, 148.
All right, got that. Gurmeet, I want to come to you with Wipro. Now, obviously, while, this one amongst the big wigs has not been able to match up in terms of, revenue growth compared to some of its larger players like Infosys, TCS. But I think one, a place where it outscores the rest is in terms of its cash conversion. If you take a look at the proportion of its EBITDA that, it converted into operating cash flow, that stood at about 98% in 2019. Is that an enough motivator to enter into the likes of a Wipro, which have so far not been able to match up in terms of price performance as well to some of the larger players, or you'll still stick by, pure operational performance?
I think that's a very interesting point you made, Divina, on that. I think, IT has been the sole performer this year. Out of 19 sectoral indices I track, I think the 14 are negative. The largest one being IT stands out. But I'll be more, you have to appreciate when you have a global slowdown, the BFSI will struggle, the oil and energy verticals, your traditional verticals, which are predominant source of revenues, will struggle. And that is where you have to see the organizations where the digital revenues are catching up, the deal win momentums are good, the cost pressure in terms of visa attrition are relatively lower. And you have to be, so IT from these levels would be a play which could possibly give you, high single digit to early double digit returns. It's not going to be a multi-bagger in an environment like this. So I would still prefer, TCS and Infi in that order. Reason being, there's, as I said, the digital revenues continue to scale up. Also, digital now with the kind of, whether it is cloud, whether it is artificial intelligence, analytics, has actually become now mainstream for most companies which are their clients. So in a slowdown, it's difficult to, make something which is now mainstream for you to, cut down your budgets and all. So I will be, considering the, the valuations right now and the fact that it's more defensive play. It's better to stick to, the top two, which is the, TCS and P. I like HCL though, and if management agrees to, meets or gets even closer to the guidance they have given, despite a flat Q1, I think that's one play which is right now the cheapest in terms of 12-13 times. So if you want to be a little, take a little higher, risk in terms of risk-return trade-off, maybe HCL is a better bet. Again, I'm repeating from a margin of safety perspective.
And that's why probably, HCL Tech is also been recommended quite a number of times and being one of the cheapest stocks in the IT space. Despite having better run rate compared to some of these bigger names. But it's time now to find out what has made it to Sharad Dubey's list of the Fab 4 stocks for the day. Sharad, what have you got? Good afternoon.
Good afternoon, Devina. Polycab is my first pick. The stock went up almost 3% after Citi has initiated its coverage with a buy rating and a target price of 736 odd rupees. The brokerage says that the company is well placed to capitalize on the growth opportunities for the cables, wires, as well as the fast-moving electrical goods. And it is also more successful than the FMEG players. Apart from this, the company is also having a strong balance sheet, and the cash flow is also improving. And they have also expect the EPS to grow at almost 26% for FY19 to 21. Up next, we are having CG Power, which is locked in the upper circuit after the board has come out with this news that is going to remove Gautam Thapar as its chairman. Apart from this, we are having ITI, which is up almost 7.5% with high volumes trading at almost 6 times its 20-day average. And the last stock of the day is Equitas Holdings, which is up almost 2.5% as fresh longs have been seen and an open interest of around 44 odd %.
Okay, thanks a lot, Chad, for bringing those Fab 4 stocks of the day. I think with Equitas, we've also got Ujjivan, which is recovered in today's session. Both the small finance banks this week have been in news after reports indicated that RBI could probably give approval to the promoters to dilute their holding completely after 5 years of operation, which according to reports and analysts, this could pave way for reverse merger for these companies. Equitas also sitting with gains of 2.5%. Just want to shift focus to markets. We're down 100 points once again on Nifty. We've seen these levels, by the way, for the day. So 10,944. Nifty Bank is at 27,300. So both the indices are now currently way below their 20-day moving average as well. In terms of individual stocks, I just want to highlight the stocks which are dragging the index lower. So, of course, your financials, HDFC, which is a heavyweight with nearly 9% weightage, is down 3%. SBI is dragging the index lower. Probably the Nifty contributors list will give you a better picture. ITC, ICICI Bank, all of these stocks are down in the range of about some 2 to 3 to 3.5%. Look at ITC. I think the fall just come in the last 5 minutes of trade. And there you go. Reliance, by the way, has not been participating at all in the last few days. Gurmeet, any thoughts on ITC? For the longest time, the street's been talking about how it trades at a discount to its peers, but this is one stock, despite of investing so much into its pure FMCG division, besides the cigarette, which contributes about 80% to its bottom line, but the stock has not picked up. It's not about this year, but I think in the last 2 to 3 years, it's not been able to reward its shareholders.
You're right, absolutely. I mean, quite a laggard. I think the only space it did probably well is the dividend yield of the stock. I find it attractive, at these levels. And as you pointed out, if you were to call it, I don't call it a pure FMCG play, but in that, ITC looks good at these levels. One can possibly try and add something, at these levels. Also, I like Tata Global Beverage. I think that's another stock in this space, which is relatively, from a valuation point of view, gives you more comfort. 20% market share in the tea segment. They're doing a lot of realignment as far as their global operations goes. The coffee business has been a little static, but they've been that's expected to do well. The Starbucks, now you have about 151 plus outlets. That's going well. The same store growth continues to be very impressive, almost very similar to what Jubilant had when it was doing well. So that looks to be these two look a better play. The others, while the story is good, the valuations are too high. So maybe in the FMCG pack, it's difficult to add Nestle at 12,000 plus with 70 Ps. So if you want to add incrementally to FMCG and defenses, maybe ITC and Tata Global Beverage.
All right, we'll let you go on that note. Thank you so very much, Gurmeet, for joining us this afternoon. Appreciate your time. And joining us now is Mayuresh Joshi of Angel Broking, who's here with us to take us through his fundamental, perspective. Mayuresh, while we've been talking a whole lot about how, what changes the FDI opening up would bring about to various sectors, anything that you found particularly interesting with regards to media and digital media, news-related digital media, and the 26% FDI net that they've put out there, and your take on, what they've done for the sugar space and whether or not you would be interested in buying into sugar at all?
So afternoon, Devina. No, again, the announcements that have been done, absolutely positive from a sentiments perspective. But look at the volatility in the markets at this point of time. So I think all announcements done are in fair say, but what it probably happens in terms of actual flows is something to be observed. So I think the digital media space, where 26% FDI is now permissible, I think what kind of investments actually come through, because this is a market which is growing at a very steady clip and expected to remain at a very steady uptick going forward. The kind of data consumption that we've probably seen across genres at this point, including regional players as well, I think there is significant traction from an attractiveness of a business model for a foreign investor to invest. On the other hand, in terms of what we...
Sugar space, Mayuresh.
Sorry, I'm not hearing you.
The sugar pocket, I asked you about the additional export subsidy and how big a positive is it?
Sure. So I think when you're probably looking at the subsidy payout that gets doled out to the end recipients, I think a part in terms of the payable position from sugar companies, I think that goes down. The second element in terms of the exports that have probably been allowed, I think you're probably seeing some amount of sluggishness in terms of realizations globally. So I think the companies will be able to push through some of their inventory through the export channel. But largely, again, I think you'll still have a little bit left over, even if one accounts for the entire inventory to probably go through across different companies in the form of exports, still lingering onto balance sheets. So realizations, as we've seen it, have shown a steady uptick. Most sugar companies are probably sitting on an inventory which is lower at this point of time compared to the selling price. So again, I think the gains that they're probably expected to do, and the other element in terms of what happens in terms of the ethanol mix that they're probably adding up to, I think that healthy mix and cocktail should probably support better leveraged sugar companies. So I think one must really look at companies which are less leveraged or better leveraged in the context at this point of time, and where I think the ethanol percentage in terms of capex is largely over. So I think a few companies might benefit actually. Balrampur Sugar, for example, DCM Shree, which is a diversified player.
By the way, some corrections which are steepening now. So 555 odd points, we are trading at the lowest point of the day for the Nifty Bank. The Nifty and the Sensex 2 are trading in and around the lowest point of the day, but the Nifty Bank is the principal culprit, which is now 500 points lower. Quick thoughts out here. Would you take a fresh trade on the Nifty Bank, Rahul?
Yeah, definitely, Neeraj. As we discussed earlier, that one should buy on at corrections, and
you're buying the Nifty Bank right now.
Yeah, definitely at these levels, but not for maybe 2 days or 3 days, but definitely for next expiry, we are recommending to buy at these levels with a stop loss of 26,900, and upside target would be around 28,000.
Aditya, are you selling any bank? The top 6-7 names are all financial names on the losing side. Are you selling any of the index banks or other banks?
So there is weakness as far as HDFC Bank is concerned on the charts. It's trading below its 200 DMA. It made an attempt a couple of trading sessions to trade above that. It's again trading below that. So that is a sign of weakness in HDFC Bank. Probably one can look to go short on HDFC Bank. Downside can be seen at 2160 to about 2180. That should be the next support area at 2220, 2225. Probably it could be a good idea to take a short on HDFC Bank.
All right, so look at what the Nifty private bank index and the PSU bank index is also doing. It gives you a sense of where the pain is more prominent, whether it is the private sector banks or it is the public sector banks, because across the board there is selling. The private sector banks, the Nifty index is down about 1.76%. The PSU banking index, which up until now has been a bigger drag, is yet again a key culprit there, so about 2.5%. But remember, from the PSU banking space, it is a bigger chunk of all of those banks fall into the mid-cap category, not so much so for the Nifty Bank, your larger private banks within the Nifty Bank itself. And that's what you've got in terms of the banking performers and how much they are off their day's high. RBL Bank is off about 4% from its day's high. Yes Bank about 3.2% off the day's highs. The other stock that I want to talk about is Sterlite Tech. The stock's down about 6.5% in today's session. Once again, now hovering around 115 odd. Aditya, this stock past few days have been pretty volatile. What would you do with this one?
I would completely avoid that. Couple of days ago, the move that we'd seen was one-off move. It was more of a dead cat bounce as far as Sterlite Technologies was concerned. It's not able to cross its very short-term moving averages or previous peaks. So these are signs of weakness in the stock. Probably we can see next leg of down move to resume soon, which can drag the stock somewhere close to about 90 to about 90, sub 90 levels in the coming weeks.
Okay, that's Sterlite Tech for you. We addressed Colgate-Palmolive at the start of the show in our F&O check. The stock was up 2%, but there is some increased momentum. The stock's now at day's high, sitting with gains about 3%. Very quick thought here, Rahul, on Colgate-Palmolive at current levels. Would you take a bet?
Definitely, it is moving in an upward rising channel, making higher tops, higher bottoms, and currently and recently also, today it has given a breakout after long 2-3 months of consolidation. Definitely at current levels and on corrections to 1230, one can buy with a target of 1307, and one should place a stop loss below 1210.
Okay, so buy on Colgate-Palmolive, fifth straight day of gain. Also, this week the stock's moved above its 200-day moving average. So Let's see if these long positions also which have been created on the future side, they continue or not. But for the week itself, also the stocks up about 5%. Other than that, we have seen good moves coming for a lot of these stocks in the pharma pack, which we've already addressed. But even JSW Steel, remember how metals have been beaten down in the recent past. So as I mentioned, some of them could also be witnessing their short covering rally considering its expiry. So JSW is also sitting almost somewhere about high point of the day. But it's that time of the show when we tell you what the dealing rooms are recommending in trade, and we've got Yatin as well as Dashan Mehta joining with their channel checks. Good afternoon to both of you. Dashan, you go first.
Yeah, so one of the stocks which is down in today's trade, and obviously that was an account of the Nifty exclusion, is Indiabulls Housing Finance. Dealers indicate that there could be more potential selling that's coming. It's recovered from the lows of the day, but nevertheless over the past few days it has been rather weak. So this is one of the stocks that's been spoken about. The other one is Asian Paints, which has been spoken about. Now, momentum play, it's trading at record highs. Some of the dealing rooms do indicate that some of the large funds, at least on the consumption side where everyone else is seeing a slowdown, are actually accumulating Asian Paints. And Escorts is up in today's trade. It's up almost 5%. It had seen significant amount of shorts, and dealers indicate that there is potential for the short covering to continue on the counter. Decent volume seen on the counter. But Yatin, what do you have?
Darshan, SBI, that is one stock wherein dealers are recommending a sell today, buy tomorrow kind of a strategy. They expect the PSU banking lot to remain weak. Today the stock is down 4% on decent volumes, and dealers do expect that weakness to continue. United Spirits, that stock is witnessing some good buying for the last few trading sessions. In fact, above 610, dealers do indicate that this could be a positional buy for the next few trading sessions, wherein there could be uptrend seen. As far as this stock is concerned, the stock was not closing above that 610 mark according to dealers, for trade, and probably a closing above that would help it gain momentum. And HNIs are said to be buyers in BPCL at this point in time. In general, in such markets, oil marketing is one pack wherein dealers do expect some comfort on the valuation front. So oil marketing as a pack is something wherein dealers are bullish on.
All right, guys, thanks a lot for that, Yatin, as well as Darshan, for those dealing room checks this afternoon rather. Want to take a quick opinion? Anything interesting that you spotted, Aditya, over the last half an hour of trade that you would like to discuss?
So there's too much of movement, volatile movements that you're witnessing across board. As Darshan pointed out, Scots is continuously seeing buying activity, so it's almost up at the high point of the day, about 6% up. I believe this up move can continue to levels of 560 to about 565 on the upside. Second one to point out would be Ujjivan. That's showing strong move on the upside. Volumes are healthy, approaching its 200 DMA, which is placed somewhere around 302. I believe stock can cross its 200 DMA as well in the coming trading week. So keep a close watch on Ujjivan. A long trade can be taken out here with a stop somewhere around 280.
Mayuresh, do you like these small finance banks?
So from a business model perspective, Devin, obviously there is a significant amount of value with the deterioration in prices that we've probably seen. Yes, they've obviously got beaten down in terms of the expected listing to come through and the holding company discount that probably can get applied. But a large element in terms of what they're probably doing, I think the disbursement growth has remained strong. What you're seeing in terms of asset quality, again, I think the pressures have been there, but again, I think it's not being so evident, at least at this point of time. The capex related to branch openings, specifically in the case of Ujjivan, I think it's a large part of that is probably over, which means that the capex oriented cycle should start tapering down for both these banks. But I think all these factors are probably culminating into the kind of deterioration in price that we are probably seeing. But is there value from a business perspective? There is absolute good amount of value when you're probably talking about a business model, and if really one has a 2 to 3 year time horizon.
Okay, that's Equitas holding for you. Also, just want to focus on NIT Tech. It's been an active counter though this week. Today, nothing has happened. It's just down about 0.5%. But in the last 5 trading sessions, it's gained about closer to 12%. Yesterday, it was up 5.5%, and on Tuesday also, it did see strong gains. Just an observation here. I was just checking the September futures. There's a steep discount which is being offered for the September futures. The cash price is somewhere about 15 that I can see on the Bloomberg terminal, but the futures of September are offering you a discount of as much as 142. So that's as steep as 10% discount being given, which is telling you maybe some short positions could have been rolled over on NIT Tech. But a quick thought here from you, Aditya. Would you make of this steep discount and would you trade this one considering it was very active this week?
I would actually go ahead and short the stock because the stock is sitting at an extreme overbought levels on the daily chart. I look at RSI somewhere around 80, and whenever RSI is at 80 for NIT Tech on the daily charts, it tends to correct at least 5 to 6%. And in trade today also, in fact, stock has recovered from the low point of the day. So there was selling pressure at the opening.
So the discount is indicating some short positions?
Yes, there can be some short positions, definitely. We'll put a stop somewhere around 1550, and a short can be initiated out here for targets of 1400.
Okay, so that's NIT Tech. For you, the other space which is given up some gains or rather is witnessing some selling pressures, the cement pack pull-up, Shree Cement, ACC, Ambuja, all of these stocks are seeing cuts about between 2 to 3%. Mayuresh, this is a space I believe you also track pretty closely and a lot of the market experts have been bullish on. Last quarter numbers, the volume growth was muted, and the survey which was done by Nikki, who tracks this sector pretty closely, suggests that the prices have fallen for the last 3 months. How would you approach now, and is there anything which stands out, any particular stock where you would lay a bet on?
Afternoon, Navneet. No, clearly, I think yes, the prices have been very, very sluggish over the past few months, but that's been a natural phenomena. As monsoon comes down, I think you're probably expected to see prices remaining extremely sticky and on the lower side. But I think it's the second half that I think analysts are probably looking forward to, with the expectations that demand-supply dynamics clearly favoring the suppliers at this point of time. Demand expected to grow at a much faster pace over the next few quarters, aptly supported by government schemes, urban, rural, affordable housing, whether you call it the infrastructure spend that one really expects to come through. I think all these factors will ensure that the volume offtake is quite significant going forward, as well as the realization growth should start improving in the second half. So the natural operating leverage that will get created on their balance sheets, volume-led price growth, and input costs remaining a little bit benign at this point of time, will clearly prop up EBITDA per ton for most cement companies. I think a few companies operating out of the south still have the issues related to realization growth compared to the north and the west. But a large element in terms of volume push through that will go through, I think will keep the expectations in terms of ROCs pretty robust as well. Most cement companies are in the middle of their capex cycle. A few of the companies have already finished their capex cycle, which means incremental volumes will come through. Having said that, I think a few acquisitions done by a few majors also should start contributing. So I think we remain extremely optimistic on the space as a whole. I think Ultratech, Ramco Cement probably is something that we look forward to on a positive note. Clear disclaimer, we own both these stocks in our funds.
In fact, some media is also suggesting that there has been an uptick in prices by about 50 rupees per bag by Ultratech in the region of Andhra Pradesh. And I think, when he highlighted the dealer note in the morning, she also pointed out the fact that come September 1st, in the western region, South India, you could actually see a price hike being implemented.
Well, let's wait and watch. There's some spike to those stocks in the session. What is doing well? We're talking about the Nifty curse for now, though. Nestle India seems to be doing okay. So perched at new highs, up about 1.5%. There is KPIT Technologies, which for the last 2 days has done reasonably okay and up and about. But aside of that, not too much. But two stocks which were very strong. And Aditya, want your thoughts out there? HDFC AMC, HDFC Life. Maybe Life has a maybe slightly longer duration chart. What does one do here? Do you think there is more upside here for both of these names?
So I'll first take a look at HDFC AMC. That definitely shows strength, despite the fact that it did correct significantly from 2300. It fell to sub 2100. From there, look at the way the stock has recovered, and the recovery is backed by extremely high volumes. So that tells me that there are buyers still in the stock, and the trend is strong on the upside. Continues to favor the bulls. If I'm holding on to the stock, I would continue to hold on to the stock for targets of 2600. If I don't own the stock, look for probably a minor dip to sub 2400, probably 2350 to latch onto the stock for targets of 2600. This is one of those stocks which you want to own in your portfolio, not just buy and sell tomorrow. So probably a healthy move that the stock is showing. Coming back to HDFC Life, there is some sort of a probably I would say divergence, negative divergence, which I see on the charts, and probably distribution also can be seen. A correction can be seen out here to levels of 520 to about 510 on the downside. See how stock behaves around those levels of 510. If it manages to hold on to those levels, it could be a good idea to again latch on to HDFC Life. This stock again has been an outperformer, continues to form higher highs, higher lows. So the longer term trend definitely is intact in favor of the bulls. For the very short term, probably there can be some correction.
Okay, some top calls then, closing strategies. Rahul, to you first, your top call.
Yeah, definitely I have a buy call in Havels. The stock has formed an high wave candle. The open interest is also picking up, so we might see a pullback rally from the current levels for short to medium term. So definitely one can buy Havels at current rate and on corrections to 658. Upside positional target 703 with a stop loss of 654.
Your call, Aditya. Your top call.
I would go for NTPC. Look at the volumes today. It's traded more than 3 CR. You generally don't see that sort of a volume on NTPC. Stock is up 3%. Huge bull candle. I believe stock is headed to levels of somewhere around 128 to about 130 on the upside. That could be a resistance. Put a stop somewhere around 121, and a long trade can be taken here.
Okay, that's a buy on NTPC. That's the closing strategy from Aditya. 92 points lower. Index is looking to expire around the levels of 10,950. So 10,950 straddle seems to be working so far, at least for the day. But Mayuresh, before we thank you, anything interesting that you would recommend buying at current levels?
I think out of the FMCG pack, I think Dabur Navneet looks a little bit interesting at this point of time. If I probably look at the last quarter's numbers, reasonable volume growth, well spread out portfolio. And yes, rural is still struggling in terms of discretionary spending. It accounts for almost 40-odd%. But a large element in terms of the direct distribution reach that they've embarked upon optimizes costs and cuts down the supplier chain. So I think with every expectation of revival of rural sentiment in the second half, as a lot of managements have put forth, I think it remains in a very, very strong position. Expectations are still ripe that margins should get maintained around 20-odd%, and valuations are not too steep even at the current juncture. Yes, for the pack as a whole, I think valuations have always remained on the higher side, but I think with expectations of reasonable growth that they've shown in Q1 and carrying on that over the next few quarters, I think it stays in a very, very strong position.
Okay, Mayuresh, we'll leave it at that. Thanks much for taking the time out and being with us. Of course, our technical experts stay on for a final thought post-market close, but here's how the markets are shutting. 500 points lower for the Nifty Bank, so it's not been a pretty 2 days. The first 2 days were strong, then almost everything has been given off. You probably 100 points shy from where you were when the big reforms were announced in Friday. So keep that at the back of your mind. The market is not in a mood to oblige, maybe for a day, nothing beyond that. The mid caps and the small caps too have corrected. Maybe the mid caps have corrected a bit better, a lot lesser than the large caps have, but there is pain for sure out there. The small cap index down about 1%. Let me talk about the large caps first though, and a lot of pain. Some gainers. Slightly better than yesterday in terms of the percentage moves there. So the likes of Sun Pharma up 5%, Bharti Infra, NTPC, JSW Steel is up about 3%. The metal names have actually had a fairly decent outing today. Let's wait and watch. I don't know if the belief is that, oh, maybe the cost will come down or otherwise, but those stocks are doing okay. ONGC and iShares are amongst others which are doing well. But banks have taken it on the chin today. Actually, rate sensitives by and large, and then company like Reliance, which is also down. So SBI, Yes Bank, HDFC, Axis, Kotak, and then Mahindra and Tata Motors from amongst those names. And coupled in between are two heavyweights. One is Reliance Industries, the other one not strictly a big heavyweight, but Kotak Bank too reasonable weightage, and that too is down about 2%. ICICI Bank is down 1.5%. So those three being lower, banks and Reliance lower, you have a very, very tough chance of trying to of even thinking of outperforming. But the broader markets, mid-cap is an index, did reasonably okay.
That's right, Neeraj. In fact, a lot of stocks also saw short covering bounce in this expiry day. So let me start off with Piramal Enterprises, which was one of the gainers. In fact, for the week as well, the stocks outperformed. It's giving it's up about 11 to 12%. And Piramal Enterprises, particularly in today's session, was up 4 to 4.5%. Move came in the second half of the trading day. Colgate Palmolive, this counter also registered registered good moves. In fact, it went up on good volume in the cash side. Futures also saw some fresh long positions being taken, 3.5% higher for Colgate-Palmolive at 12.56. Escorts had a good day today. In fact, the stocks up about 20 to 21% in the last 5 sessions. Today, it was up about 5%, closing around the levels of 517. And your small finance banks, which cooled off yesterday, were back in action. Ujjivan and Equitas, both of them registered very strong gains. So Equitas closing with gains of 2.5%, slightly off the high point of the day as well. And Ujjivan closing with gains of 3.5%. And Biocon, your Nifty Pharma index recovered in the second half. And Biocon was one of the constituents which gained besides Sun Pharma. That was up 3%. Of course, Sun Pharma going up. You also had Spark, which went up. So Spark had a good outing today, closing with gains of about nearly 8%. On the losing side, from the broader markets, Lemon Tree did not have a great session. Selling pressure seen for that stock, down almost 7%. We were talking about how the cement stocks were down today. So something like Shree Cement and as well as ACC, both of them were down between 3 to 2%. Shree Cement down over 3% in trade, and ACC also down 3%, closing at days low. Bank of Baroda from the PSU banking space was down, particularly I think the financials were very weak today. And Tata Elxsi from the ID pack did not have a great session. That stock will just come up on your screen, and that's closing with cuts of 3%, almost at the low point of the day.
All right, we're done with the series of August. This is the expiry for the August series, so it'll be good to take a look at what happened through the series and how the indices have performed. Nifty Bank for the day is down 1.6%. Nifty itself has given up about 84 odd points. But I think the series performance there on your screen, 2.5% under for the Nifty 50. Gains, you've got autos, which actually saw a slight bit of a pickup this series. Some turnaround for them. Maruti moved from 5,600 to about 6,200. Hero Motocorp, Bajaj Finance, and then your usual gains coming into the likes of Asian Paints and some IT firms which have supported the index. On the losing end, Yes Bank 34% given up. Indiabulls Housing Finance now that's going to be exiting the index, and the rest of the other high beat up names, banking particularly, and even metals that lost steam in the series.
Well, while Nifty was down 2.5%, Bank Nifty actually underperformed. Bank Nifty did see cuts of about, I think, nearly 4.5 to 5%, actually 6% now, because we did see the selling pressure coming in last out of trade. Yes, Bank down 34% for August series. RBL Bank down 30%, and of course you had State Bank of India also, which did not perform well. It's just one stock, I guess, was up 10%, and that's also a beaten down counter. It recovered. So ICICI, Punjab National Bank, most of the constituents saw losses of between 1 to 34%.
All right, and lastly, let's just take a look at what happened on the turnover side. Today is the expiry day. You would have anticipated the futures and options turnover to be slightly more elevated. 28 odd lakh crores in terms of the futures and options turnover. Cash market averages out to about 32,500 odd crores. So not a bad session in terms of at least the overall turnover and the activity in the market. But getting in some closing comments from both our technical experts. Aditya, let's start off with you. As you step into trade tomorrow, what is the one crucial thing you'll watch out for?
Sorry, I didn't get your question. You are referring a stock or just the index?
No, just the index.
So amongst all the gloom and doom, I'll just point out that on a week-on-week, Nifty is closing positive 1.1%. Bank Nifty is closing up about 1.2%. So week-on-week close, we are closing positive. So that's a positive sign for the markets. I still believe 10,900, 10,920 is a good support zone. One should go ahead and buy around these areas. For upside targets of 11,150, put a stop somewhere around 10,848, 830. Bank Nifty again continues to take support at 61.8%, which is about 27,200. I believe those levels should hold on to in the coming trading weeks. We could see again levels of 28,000.
Okay, Rahul, what about you?
Yeah, with the formation of inverse head and shoulder on both the indices for tomorrow's call, I would recommend to buy Nifty at current levels with a stop loss of 10,888. Upside intraday target for tomorrow would be 11,055. On Bank Nifty, one can buy at current levels, maybe on 100 points if there is a sell off or cool off tomorrow. One can buy Bank Nifty with a stop loss of 27,100, and for tomorrow the upside target would be 27,600.
Okay, that's the view on the Bank Nifty, and it's the third straight series where we've seen losses coming about for both Nifty and Bank Nifty. Let's see how the September series starts tomorrow. But on that note, would like to thank both our experts, Rahul as well as Aditya. Thanks a lot for coming to our studios and giving your thoughts on the technicals of the market. With that, it's a wrap on this edition of Countdown. Goodbye from Neeraj, my side, Davina as well, and the entire team who put this show together. Thanks for watching. Stay tuned to Bloomberg Wind.